Hello and welcome. Thank you for joining us on Business Incorporated, coming to you live from our Lagos studios here in Nigeria. I'm Chimezie Obi Iwago. On the show today, the International Monetary Fund budgets $1.158 billion for 2020. Egypt expects its borrowing needs to hit $48 billion in 2019 to 2020 fiscal year. Plus, Tanzania eyes 10,000 megawatts of power generation capacity by 2025. First, let's start off with the markets. And it was a negative Tuesday during the intraday after the Easter holidays across major markets in Africa. Egypt's EGX30 lost the most at intraday and was down 0.73%, while the JSE index followed closely, shedding 0.25%. The NSE was down 0.09%, and Kenya closed in the red on Monday. In the Middle East, Saudi Arabia's stock market rose, lifted by a string of corporate earnings announcements for the first quarter, while real estate shares weighed on the Dubai index. Saudi Arabia's index climbed 0.46%, with Riyadh Bank gaining 3.2% to reach its highest in 13 years. The lender posted a 44.7% increase in its first quarter net profit. Dubai's main index slid 0.35% as its largest listed developer, Emma Properties, fell 2.6%, and its unit, Emma Malls, lost 1.1%. The Abu Dhabi index was up 0.34%, with First Abu Dhabi Bank rising 0.6%. Qatar's blue chip index was down 0.18% as heavyweight industries Qatar declined 2.8%. In Europe, the equities started today's session slightly lower as investors monitored a number of geopolitical issues and looked ahead to a new earnings season. Let's talk to Ulrich Bartz, my colleague at the Frankfurt Stock Exchange, for more from the European space. Hello, Ulrich. Good afternoon. Good to see you again. Well, Ulrich, if you can hear me, Donald Trump is now ending the waivers for countries doing business with Iran and importing their oil. Among others affected are China and India, big buyers of Iranian oil. That has contributed to spikes in the oil price. How is that going down in Europe?
It's not going down very well. The markets aren't affected hugely at the moment, but they're mostly in the red, even if that is only slightly in the red, as is here in Frankfurt. Maybe you can see the trend behind me on the big blackboard there with the DAX. But the CAC 40 and the Milan index in Italy are also down slightly. Funnily enough, the FTSE in Britain is up by about 0.5%. The oil prices you mentioned have spiked, and they are a worry for people here. If it continues to be at these levels, if the levels grow, as it becomes more clear that Iranian oil will actually be going less into the market, and China, India, Japan, other countries as well, Turkey, Korea, South Korea, or Italy go elsewhere for their oil needs, then the prices might go up. And this comes at such a very sensitive time where you've been seeing all sorts of corrections on forecasts for economic growth this year. It's not bad for all the companies. The airline shares are going down, jet fuel, a big expenditure. But as could be expected, the oil companies are profiting from this speculation. Both BP and Shell here in European trading, they're up by between 2 and 2.2% on the years.
All right, let's look at the M&A market. A big decision is expected this week in Frankfurt, the merger of the two biggest banks in the country, Deutsche Bank and Commerzbank. Now, that could either be stopped or get the nod to continue talks. What are you hearing?
Well, we're hearing almost exactly nothing out of those towers that are not all that far away from where I'm standing here. Occasionally you see some news leaked from the supervisory board of the Deutsche Bank, for example. There's a current report that says that the supervisory board at the Deutsche is skeptical of the move, and maybe it's even the people representing the capital side here in Germany. We also have a strong staff employee side, though, which is in these supervisory boards, and they're dead set against it, both at the Commerzbank and the Deutsche Bank, because the rationale, of course, one of the major plus points that the banks could come up with a merger like this is slashing tens of thousands of jobs, and that will hurt the employees, that will hurt the environment in which these banks run in. But some people do see this as a risk worth taking in order to get ahead in stabilizing these big banks and getting them more in line with the bigger, let's say, the more successful competition in Europe.
And another company today, merger talk, Thomas Cook, the travel company, in the midst of speculation, it could be taken over by prominent private equity firms. Tell us about the motivation behind that and what the share is doing.
Well, the share is Thomas Cook is soaring. It's going up between 15, 16 at the moment, 17%. Earlier on in the day, it was going up by up to 20%. Now, mind you, this is to be seen against a drop of about 80% within the last year. So good news for the day, sending the share up, but on an absolute term, it's really nowhere in comparison to where it was a year ago. Thomas Cook has been beset by many problems. The Brexit, it's a British-based company, the Brexit being first and foremost among those. The traveling trends, traveling needs, traveling decisions of the British people apparently also a reason. And you see the price of oil, the price of jet fuel, also an issue for this travel company, which operates over 100 commercial jets. The companies in question, private equity, KKR, very well known, EQT, also a name that's maybe not readily available to all the viewers that we have, but certainly in the scene they are big hitters. And when names like this come into play, then the investors think, maybe there's some money to be made here.
After the Easter holiday, let's keep an eye on those merger talks and, of course, the earnings that will be trickling in this week. Thank you for your time and enjoy the rest of the day, Ulrich.
Thank you.